Joining in on the show right now, we've got with us Arun Mishra. He is the CEO at Hindustan Zinc. Thank you so much, Mr. Mishra, for taking time out and joining us on ET Now. To begin with, what has been the pace of recovery for domestic demand? Steel players in India have been constantly increasing production, and you already had reached your 90% capacity in the months of May and June. So now can we assume that you're back to your pre-COVID levels by way of volumes?
So if I answer the last question first, if you see the Q2 numbers this year are better than last year's same quarter. Just to give you some numbers comparison, ever highest ore production, which is up 24% quarter on quarter. But if you compare Q2 of last year, it is up 9%. Similarly, refined metal production compared to last year Q2, it is up 13%. Silver production is up 51% compared to Q2 of last year. So of course, if you look at Q2 of last year being pre-COVID numbers, we are better than that. So that answers the last question first. If I look at the uptick in the domestic demand, yes, we are seeing a strong surge of domestic demand coming into Q2. Most of our customers who are into the steel sector are firming up the demands, and they're all going into full capacities, including the galvanization. We see a strong push in the rural sector for the automobiles and also rural farm machinery. We see a demand coming back for replacement of lead batteries in the auto sector. So that shows either it is due to the inactivity of the prolonged lockdown, which is causing replacement. But we also see some uptick in the fresh demands for new batteries and consequently demand for lead there. So overall, we are very optimistic. Q2 has proven for us very good, and overall growth numbers we should see a turnaround. And Q3, Q4, we are very optimistic. It will continue. Even better numbers should come from the domestic demand angle. Just to give another figure, the Q1 we were mostly export oriented because the domestic demand was not there. Q2 has completely reversed that trend, and we are now primarily domestic oriented in the supplies. So that shows the growth which is coming back.
And have the average zinc and lead realizations bottomed out? Have you managed to clear out the inventories?
I wouldn't be speculating on the future prices. However, let's look at the drivers of the prices. Globally, 5 to 6% cut in mining production of zinc is predicted by Wood Mackenzie. Demand is likely to shrink by 5%. However, the emerging economies, again China onwards, are coming back, and India following suit, and stocks are low in the Shanghai exchange. All that coupled together, prices should remain stable or improve. Demand is growing. And I think people, all the emerging economies have learned how to handle the COVID issues very well, be it testing, be it improved hospitalization, be it managing workforce on the ground inside the factories. The recovery rates are very high, and the fear which was dominating the minds in Q1 are quite subsided in Q2. And going forward, all of us are now quite ready how to, in case of infections, also how to handle the situation. So I see the prices, while I won't speculate, but I see the prices should hold, if not improve further.
Mr. Mishra, you've managed to keep your cost of production pretty low from $950 to now $919. Will it stay at these levels if coal prices rebound?
No, so coal prices may have an impact if they go up, but we are continuously looking at the various sourcing opportunities as well as the mix of domestic and imported coal. At the same time, we are currently completing one work in one of the power plants of upgrading the turbine with the same steaming capacity, how it can produce more. That means our specific consumptions will go down. So we are continuously on that work. If you are mentioning specifically for coal, but let me assure you that we had taken a very aggressive cost reduction targets when we started Q1. We had made very innovation teams who worked on all aspects of consumption, and we have, and also the commercial teams worked on various renegotiation of contracts and supply prices. looking at the global scenario relevant at that point of time, and we are only reaping the benefits of our consumption norms where we have improved, including the price norms, including the productivity norms, as well as the power consumption norms in the smelters, which are the largest cost drivers, as well as coal consumption norms in the powerhouses. So those are the structural improvements which should see us through even in quarter 3 and quarter 4. That's why our guidance is less than $1,000 per ton. Our current costs in quarter 2 has been very good. You should be holding or doing better than this. At the same time, I would just put a caveat there that our mines in the quarter 1, we could not do mine development enough of it. We need to come back strongly on mine development, which should see a little bit of push up on the cost, but overall we should be operating within the guidance.
Right. The silver revenues and EBIT have actually doubled. In fact, the EBIT is higher than lead and zinc as well, individually too. Will you look at scaling up the silver business?
No, very recently we have appointed a CEO for silver business just to have very focused attention for increasing the value of this business, which will not only on metals selling, also looking at recoveries in the plants, recovery in the smelter, and also looking at all business models in the consumption of silver. Prime focus being India primarily consumes silver in the jewelry sector, whereas in the developed economies it is in the industrial sector. What could be the opportunities? We have to understand that our country's economic push for digital is also opening up a huge consumption of smartphones, smart devices, solar power, which all have a potential of much higher silver consumption than what is happening now. So the CEO will continuously work with various stakeholders to give that push.
The backfill plants at Zawar, have those been commissioned? And where will zinc, lead, silver volumes, for instance, and capacity be by the end of the fiscal? What can we expect for, let's say, up to FY22?
So after, as of now, with the H1 performances, we are quite confident of going. Our guidance is 950 KT of metal, and we should be achieving that well, keeping the uncertainties still that play a bit of a role in the going forward in the quarters more on the COVID side. But we should achieve that, and if not better than that. That is one. Second, we should exit quarter 4 at 1.2 million ton rate, which was our projects that have been commissioned. The backfill plants in Jawar are going to be commissioned in the month of November onwards. A few more plant which is waiting for experts to travel. So once the aero sector opens up and visas are issued for people, experts to come to India, we should be able to get that commissioned.
Okay, you had about 15,000 crore, 2 billion net cash on books as on 30th June, which has increased further as on 30th September. Capex at 300 million, dividend payout at 9,000 crores. So what will the 4,000 crores raised by NCDs in September be utilized for?
No, so we have our very strategic investments. We are looking at consolidating 1.2 million ton operations. We are looking at growing to 1.5 million ton and start spending on those growth projects. We have just done an MOU with Gujarat government on a standalone smelter, on which the detailed feasibility report is still in the place. And overall, I see growth prospects needing capex allocations from us. We are on the positive side, and should not be an issue for us as far as capital investment is concerned.
Now, is there any guidance when it comes to your debt or raising money for this fiscal? What exactly can investors expect?
I would refrain from commenting on that. But over today we have declared dividend. I think it's a good dividend and should it's in line with the results that we have declared.
Okay, I won't probe on that, but let's talk a little bit about the dividend then. You've declared about 21 rupees per share. That's at a 10% yield. It's the highest in a very long time, especially when you've been speaking about conserving cash. So what's the rationale there for the dividend?
We will stick to our dividend guidance, and we will, as long as we keep performing and churning out numbers, it should not be a big issue.
So, also, Mr. Mishra, the Supreme Court has been talking about Hindustan Zinc disinvestment as well. As a minority investor, what can one expect? What's in store?
We, as a management in HZL, we would not be commenting on that. It's in the shareholders, and we will let it pan out the way it should. Bring it to a conclusion. HZL has been a very successful disinvestment story in India.
Mr. Mishra, great to have you on the show, and thanks for answering all our questions. That's the word coming in from the Hindustan Zinc management. Let's move on. Let's talk earnings. Coal gets slated to come out with its numbers. Vinny, what can we expect?